Today is Monday, March 2nd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg and Mark Bowman from the ADMIS research team. And starting with Mr. Soderberg this morning, Mark, how do you see the situation in Iran impacting prices in the ag space?
Well, really, we're kind of looking at a double-edged sword here. And on the supportive side, we've seen energy prices surge given the instability in the region. This, in turn, has fueled a surge in soybean oil prices. Well, also supportive to corn, given its usage as a major feedstock for the production of ethanol. On the negative side, however, is that China, they have formally denounced the U.S. military action, and this could potentially jeopardize the Trump-y meeting that is scheduled to begin late this month. To me, it seems really hard to envision China buying any additional soybeans, much less the 8 million metric tons that President Trump has requested they purchase, unless things smooth over rather quickly. Meanwhile, Brazilian beans still remain about $1 to $1.25 below U.S. offers. I suspect the energy prices, I know Mark, we'll hear from Mark on this here in a little bit, will continue to remain quite volatile, which will likely drive volatility in the ag space as well. President Trump has recently suggested the military conflict may take several weeks to ensure that their military assets in Iran are destroyed. Higher gasoline prices while helping ethanol prices, which in turn will drive production and more corn demand. USDA has been pretty much stuck right at that 5.6 billion bushels of corn usage now for several months, and I don't think this is really going to change that, at least in this month's WASDE report. What we really need to see to move the needle here is the year-round sale of E15, which still likely is going to take a couple of years to implement and to build out the capacity. So if we indeed seen a peak in energy prices here today, I do think we've probably seen a peak in corn prices as well at 450 or just over 450 on that May contract. And to me, on the bean oil side, prices today surging above 64 cents a pound overnight. They've already discounted quite a bit of bullish news on these biofuel mandates and small refinery exemptions, which in turn has driven expectations for higher bean oil demand. Crush margins, they have now surged to the highest levels in 7 months, but we're eventually going to have to see this realized in actual demand, because right now that's been lacking. On Friday, we did get EPA usage from the December. It's shown only 859 million pounds of bean oil used that month, and that's the lowest since last April. Year to date here in the first 3 months of the 25-26 marketing year, usage, that's down 22%. The USDA forecast is up 26%. So we're falling into a deeper and deeper hole, which I don't think we're going to climb out of. So look for the USDA to shift over some bean oil usage out of usage for the production of ethanol, either to stocks or other domestic usage or exports.
And Mark, what does the commitment of traders look like currently? I mean, how are the large speculators positioned in the ag space?
Money managers, they've been huge buyers in the agricultural space, buyers now for a 6th consecutive week. Last week, they added just over 173,000 contracts. This extended their long position to the largest in 53 weeks. They bought just over 75,000 contracts in the soybean complex, and this extended their long position to nearly 280,000, just shy of the peak we saw last November. And this is the first time since November of 2023. Money managers, they are now long all three aspects of the soy complex. They also bought about 51,000 contracts of Chicago wheat futures in the last week. That's the most ever. Still short about 17,000 contracts. They also bought a record amount, a total of 74,000 contracts across the three classes. That was the second most ever. In corn, there wasn't a whole lot of activity last week. They did cut their short position in half, but big buying on Friday probably flipped that position out to net long, around 5,000 to 10,000 contracts.
Thanks, Mark. Mark Bowman, what are the implications of the USA attacks on Iran for the energy markets?
Well, the reaction already has been swift and sharp. April crude oil opened $8 higher on Monday at $75 a barrel. And one of the fears going into the conflict was that Iran would attempt to close the Strait of Hormuz. They haven't closed it, but shipping has already been interrupted. Tankers reportedly backing up on either side of the strait, as they are both wary of attacks from Iran and also trouble getting insurance for the ship movement through there. And Qatar, which itself exports about 20% of all LNG exports, they announced that it was suspending shipping for at least 3 days. And so I imagine the trade might get more anxious if shipping stays suspended beyond that time frame. Now, in addition to the shipping interruptions, we've seen Iran hit oil and gas facilities, and several have been forced to shut down, some including an oil field in Iraqi Kurdistan, some Israeli gas fields. Saudi Arabia shut its biggest oil refinery on Monday after a drone strike. So it seems like Iran is intent on attacking the Gulf oil infrastructure in general, and that is not winning them many fans from the Gulf states, not only from Saudi Arabia, which is a U.S. ally, but also from states that have up till now been a little more cooperative towards Iran, like such as Qatar and Oman. And that could isolate them even further, and that could ultimately be bearish, possibly, as an isolated, powerless Iran would maybe tempted to lash out, but also might be, we might get to an end of this faster. Really hard to say there, though. We've seen the nearby charts. We've seen the market take back some of its losses, but if you have to go back to the January 2022 high was $130.50. And the move from there to the low this past December, 54.98. So a huge decrease. And so retracement targets, 382 retracement is at 83.83, the 50% at 92.74, and the 618 is at 101.65. So those are all three levels to be looking at as possible upside targets, depending on how long this thing lasts, how quickly the political situation develops internally in Iran, whether moderates will be able to gain the upper hand, or whether the extremists remain in power and are bent on retaliation through the end. In the immediate sense, we have this question of how soon shipping will resume.
How about the soft markets, Mark? Does the situation in the Middle East impact the softs?
A little bit. We saw a rally in sugar today because the high gasoline prices make ethanol a more attractive alternative, and cane is used as a feedstock in India and Brazil, and so these higher margins could encourage some processors to move more of their crushing activity towards ethanol at the expense of sugar. We've already seen this sort of happen in Brazil, mostly due to just very low sugar prices. We have a year-to-date mix of 50.7% for sugar, but it's been declining since it reached 55% during the first half of August. The new marketing year for Brazil begins April 1st, and forecasters are already looking at possibly maybe dropping to 48 to 49% in 26-27. And obviously, if the surge in crude oil holds, then that could encourage a smaller share for sugar to start off the year. And over the cotton market, the immediate reaction was negative. We had a rally in the dollar. It makes U.S. cotton less competitive on the global export market. Cotton very responsive or sensitive to economic situations. So the weaker stock market to start makes questions about demand. Demand for cotton being so tied to prosperity, buying clothing or buying furniture, which gets a boost from stronger housing markets. So when you have this uncertainty develop, it tends to pressure cotton. Now, one factor that could theoretically support cotton is a higher crude oil makes cotton a more economical relative to man-made fibers, but we really didn't see that today. The other factor, though, in the cotton market is how U.S. sales are going. They've been very slow this year, and also getting the new crop in the ground and getting the growing season underway. And right now we're a little bit dry in Texas.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.